The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple, and welcome back to this week's market update, analyzing potential opportunities inside of the Nadex market. So, kind of crazy times here. We are into the last week of July. When I say that, it's just absolutely crazy that we have already gone through, the summer's like 3/4 over. Absolutely crazy. A lot of stuff going on in the market today. I don't know if you guys have been watching what's going on or listening. There's a lot of data out that has just been kind of crazy. We have the U.S. and China, shooting barbs back at each other, shutting down, consoles and things like that. Obviously, everybody knows what's going on with there's that big S word that's hanging out there right now, stimulus, right? Stimulus. We've seen two sides of the coin so far. The latest is nothing's really passed, right? We got a couple days of negotiations to go still, but it's setting up to be an amazing week in trading. And it already has been some great opportunities. And then again, even some of these calls that people are putting out there for when is gold going to stop? What's the top going to be? And then what does silver look like? You're starting to see articles on silver as well. So crazy stuff. Very excited to be back again. Let's just jump into things for the day. All right. So for those of you that are new that don't know who I am, I'm the president and CEO of a company called Keep Trading Simple. I've been trading since about the 2000 tech bubble. So seen ups, seen downs. I'm part of that generation that has watched the market crash their 401ks, 3 times now. So it's a kind of a different look on things. I started much like many of you out there. I started as what's called a retail trader. All right, and I started buying books. Back then we didn't have YouTube, so I started going to seminars. There was kind of online classes, but not really. Everything was in person. But I learned a lot what not to do inside of the markets, and I was able to kind of feed through those things. And I started with stocks and traditional options. I ended up finding currencies and fell in love with that. Got into futures. Eventually, obviously, found Nadex as well and added that arrow to my quiver. I ended up becoming a financial advisor. I figured I know things from the outside. Let me go from the inside of the market and see all the specialized and advanced knowledge that they have that nobody else has in the world. And very quickly, I realized that that was not necessarily the case. There was floor traders, and again, there was the system that used to work back in the day before technology and transparency. But I learned very, very fast that financial advisors aren't the kind of market analysts that that I had originally thought. So I did learn a lot. I learned a lot more about bonds, something that I didn't really know as much about, being on the retail side of things. But really learned a lot of the inner workings of the market. So I left that industry because it was not what I thought, and I went back out and realized my passion is to teach people how to do this themselves, how to trade the markets. And again, that's why I do what I do. I am also one of those people that I try to keep things as simple as possible. I'm sure you guys have heard the acronyms, the KISS mentality, right? Keep it simple, silly, right? There's other words you can put in there, but yes, I'm a big believer in that. So my charts, sometimes they can get busy. I do a lot of stuff with horizontal boxes and rectangles. I'm not an indicator-based trader. I am a price action trader. So have you ever heard the terminology price action? It's about reading candles, finding where buyers and sellers are, and in my case, using supply and demand for it. So that's what I do. I love Nadex. I think Nadex is absolutely great. It's why I continue these presentations for Nadex. I've created a number of different classes based off of different strategies using Nadex. When I cover them on the next slide, the disclaimer, you'll know why that I'm using Nadex for these different strategies. I spent about 6-7 years traveling around the United States, the U.S., and Canada. First and foremost, though, I am a family man. I don't spend 18 hours in front of a computer. I use technology, and if you guys are not using technology, you guys absolutely should be, okay? With that said, let's go right into the disclaimer, all right? So the Nadex risk disclaimer for today is trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost to enter their transaction, including fees. The information presented within this presentation is for informational and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Nadex is a registered trademark of the IG Group. Now, we will cover all 3 of those today. Here's the agenda for what we're going to cover if you are new for the group. First thing first, I'm going to cover the upcoming news events. We'll talk about what's already happened today, because again, that is driving the overall market right now. We'll talk about what's coming up the rest of the week and different news releases that you should probably keep your eye on. There are some ones this week, particularly tonight, that are going to be extremely important, especially for things like gold. Okay. Then what we'll do is we'll cover in the indices, see where they are, see where there are potential opportunities. There was actually some trades I set up yesterday for my group. We actually took a nice little bounce off of it in the middle of the night last night, so that's still in the chart. And I'll show you where that one was, and we'll see. Again, is it an area that we may get another bounce off of it later? Then I'll cover Forex, and we'll kind of jump through the Forex pairs. Forex is one of those things right now. Very interesting market because we're talking a lot about trade deals, inflation, gold, stimulus packages. A lot of people are like, what the heck does stimulus have to do with a global economy? Well, the US dollar is considered, basically everything against the dollar are the major pairs, right? It is, it's traded everywhere, right? It's kind of like the gold standard for everything. Well, we start jacking inflation in the dollar, it's going to mess up the currency world. Not mess up, but there will be so much movement in it. And again, we're going to see it this week, between Wednesday FOMC and any type of agreement on stimulus. And what we will do too is I'll check what the most recent stimulus kind of package is. I looked at it last night, and I don't think it's really changed too much. I know that there has been a little bit of a change, but I want you guys to kind of understand it and kind of look at it and take a step back, right? We're not talking politics. We're talking about what kind of package A versus package B looks like. And depending on if it's package A, package B, or a combination of two, what can that do to the markets? What type of opportunities that provide for us as a trader? Last but not least, we will go into commodities, gold, oil, and silver. And I cover silver every week, but silver is going crazy. And as I mentioned last week, one of my friends is like, silver's going to 50. So we'll kind of check the charts out and check on that one. All right. So let me pull in my preferred kind of news release site. And again, this is the one that I use the most. I use this and DailyFX are the two that I use. I'll actually pull some DailyFX data later. You guys know I like this one because, again, the scanner is just in your face right there. What's moving in the currency realm? Okay. Right now, I can say, for the most part, it looks like we have a little bit of dollar strength, a little bit of dollar weakness. Right now, looking at the euro basket, again, down 22 in the last 24 hours. Also seeing that the euro pound is down, so we have a little euro weakness. We got a little pound strength in here, right? Up 64, up 42. Euro pound is down 62. So again, the pound is retracing some of the weakness that it had last week. And then everything else, you see the dollar is just slightly weaker, right? Minus 20, minus 34, minus 20. Again, Aussie dollar is up against the US dollar a little bit. 25 is really not that much, right? And again, obviously the pound is the big boy. He's the bully on the playground right now. I wouldn't say that anything else is overly weak. So, looking at what news we've had today, Spanish unemployment. Again, that may be kind of hinting to why the euro is a little bit weaker. I mean, not that 15.3 is it's better than what the forecast was. But 15% unemployment is pretty crazy. Can you imagine, if we maintain 50%, unemployment in the United States, how crazy it would be here? That would be nuts, right? As of today, obviously, we had the Fed announcement this morning. Consumer confidence, never a good sign when consumer confidence is low. They had predicted it was going to be about 94. Now, you don't have to be an expert on what CB consumer confidence is, but you need to understand what it does and what it can do to the markets. Okay, the consumer is the most important part of the entire economy. If the consumer wants things, they buy goods. It basically stimulates everything out there, okay? The fact that the consumer is getting less and less confident in the overall market, the economy, the recovery, COVID-19, is kind of a telltale sign of what could be happening very, very, very soon. We could start to see major crashes, recessions, things like that. As we're timing this with the election later this year, again, consumer confidence going down, election in, looking at the polls. Again, one party typically is pro-Wall Street, one is kind of anti-Wall Street. There's a lot of different factors kind of lining up here. So again, consumer confidence looking like it's going down and continuing to go down, not necessarily the best sign. Now, tonight is an extremely important release. Now, you may or may not be a currency trader. I'm going to challenge every single person. Right now, there's over 50 people on this channel, right, listening. I'm going to challenge every single one of you tonight. I don't do this often. You guys know if you've been watching these broadcasts. I don't challenge you guys often. I am challenging every single person that's listening to this right now or until 9:30 tonight. I want you to get on your charts tonight at 9 o'clock, and I want you to start looking where the Aussie dollar is, the Aussie dollar currency pair, okay? You can also look at the Aussie yen, and again, you can do that. Go to DailyFX. You can pull charts directly from there inside of your Nadex platform. You could also directly pull charts from in there and be able to manipulate those charts. I want you guys to look off some of the levels we're looking today, and I want you to see if you can find a position. And again, if you're not comfortable taking it, I want you to go over and take it in demo, all right? CPI quarter over quarter is going to give us a direct look inside of what COVID has done to Australia, okay? The trim mean CPI is not as big of a deal, but the CPI figure 9:30 at night, there is no dollar traders. It's purely an Australian play. It's one of the cleanest trade releases that you can have. This is a big one. And again, if you want to know more about CPI, you're more than welcome to click on it. And again, when we talk about, consumer price index, this is a gauge of inflation. Okay. Reason why is because we have US CPI as well. Not tonight, obviously, at a later release. But understanding inflation, this is why gold is going absolutely crazy, right? The stimulus, the stimulus that everybody's going to get ready to receive, that is going to start driving inflation crazy. So this is a perfect release to help train yourself of how to handle it. And you can see they've all been positive, right, for the last basically 2 years. This one's coming in negative. So again, great news release to trade. Now, obviously, guys, the challenge is go find a position to trade tonight. Try something new. If you guys are doing this in demo and you've never traded it, great time to try it, whether a binary call spread or even a knockout on there. All right, tomorrow, Wednesday. This week, Wednesday, is going to be pretty crazy, right? Crude oil at 10:30. Obviously, last week we had an absolute huge surplus, 4.9 million extra barrels. And what is the economy doing right now? They are starting to shut back down again. If people are not going back to work again, what does that do for our demand for oil right now? It starts to lower it. Okay, starts to lower it. We already had 4.9 million barrels last week. They're saying that we're going to have about 1 extra million this week. We'll see what this is going to happen. What's going to happen with this number? So crude oil tomorrow at 10:30, setting up to be an amazing trade. Pending home sales. Pending home sales is kind of, the media will take that one over and be like, oh, home sales are good, home sales are bad. I mean, again, it was up 44. It's only supposed to be 15, so it's much, much less. But all eyes tomorrow will be on this FOMC statement. Okay? I don't expect them to lower the interest rates. I think we're pretty much, I think we're done. We're not going to, I don't think they're going much, much lower than this. If they did, kind of a surprise. But what they say and what their tone is about how long they think the recovery is going to take will be interesting. Now, remember, these are financial analysts. These are not medical professionals. These are not doctors. So for me personally, and again, you guys are more than welcome to disagree with me on anything, them projecting how long the coronavirus, the coronavirus, COVID-19, how long the repercussions are going to last depends on how long it's a problem. Okay? These are financial guys. These are numbers guys. Maybe they're keeping up with the news again. Madeira or whatever put they started phase 3 on a vaccine yesterday. Pfizer's supposed to start one in the next day or two. J&J just started a phase 1. So there's a lot of stuff on the forefront. But again, these are not medical professionals. So take that with a grain of salt. But again, they do craft, the monetary policy, raising of interest rates, things like that. So it'll be interesting to watch. Now, typically you have some reaction off the 2 o'clock. The 2:30 is the real gem. And here's why. This statement is prepared ahead of time. It's already written. They already know what it says right now. It's already done. This press conference is questions. Anybody ever been questioned by somebody else and you didn't expect a question? That's where different type of responses. Again, you can only craft so many canned responses. This is where you get some hidden gems. So again, keep that on your radar. Going into Thursday. Thursday, we have some advanced GDP numbers. Okay. I don't know if you guys saw this or not, and maybe this is a misprint, but do you guys see the forecast? Look at this forecast for the GDP number. Like last time it was -5. Do you guys see the advanced GDP quarter over quarter? Minus 34.5%. Kind of like, what? And again, if you guys remember me saying last week, what were we supposed to watch last week? The unemployment claims number. I said, hey, I expect it to be higher, right? People are getting let off. We'll see it finally jump. And again, we missed, right? We missed to the top side, right? We had about 100,000 more people putting in unemployment claims. I expect it to be on the higher side as well this week because, again, more businesses are shutting down, more things are closing back up again. So, again, I expect the unemployment. So we have GDP at that time. We have this. We have German preliminary. Again, this is going to be straight Euro data. And then we have the whole rest of the day, and then look what we run into. 9 p.m., we have Chinese manufacturing. Now, Chinese manufacturing is supposed to be good, but the question is, if countries are not purchasing as much, is China still producing as much? So, Chinese data will typically also kind of affect the Aussie dollar, and the reason why is because the Australian currency, or Australia as a country, is an export country, particularly for commodities and natural resources that China uses for industrial expansion. So with manufacturing, PMI, if these numbers are good and they're showing contraction, not expansion, this will also weaken the Aussie, which again, the Aussie's been on fire because of the gold. Just like gold's movement, right? Friday, bam, we have CAD GDP. Now, CAD GDP, again, if you remember, last time was down 11.6%. It's supposed to be positive, 3.5. We'll see if that's true or not. And then again, we got some consumer sentiment and then some Chicago PMI. So there's a lot of good releases the rest of this week. It's just one of those weeks where we go with like nothing and then a lot all at one time. There's a lot of different releases. So I can ask this question. The reason why I really dove into this for extra time today was because of this. I always get asked, well, you say you don't sit in front of your computer for 18 hours, but how do you find time to trade? Like, what's the best time to trade? Like, when can I focus on this? I got a question the other day. Looks like I'm going to be, at home again because I have to, do homeschooling. I got to do that virtual schooling for my kids. How do I find time to trade? How do I juggle it? I said it's very easy. Okay. News is an amazing way to trade. And literally Monday morning, I can map out my day of when I need to be at my computer. I'm obviously going to be at my computer here, right? Right. A lot of stuff going on here. I'll probably be here for the advanced GDP. I'm going to be here for the manufacturing number. I'm going to be here. So you can actually map out your day early in the week. And again, that's why I love Nadex so much, because you get so much movement and the limited risk, aspect of Nadex, particularly with the binaries. It fits perfect for this type of trading. So if any of you guys are in the same situation as, this individual that emailed me, where you're going to be homeschooling your kids, working from home, guys, use these news releases. Some people skip over this section. This is how to find when the most movement is going to occur. What are the catalysts? Where is it driving price? It's right here. This is the secret. Find these things. This is the secret. All right. So with that said, that's the news for the week. So let us go over, and I'm going to start pulling some charts. First things first, we'll go into the indices. So let's pull the NQ. All right. So we were up here last week, and I mentioned that we had we had a white zone in here where price had bounced off it a few times. I wouldn't really be interested in taking any trades off of it, but we had marked off a lower level down here at approximately 10,306. Okay, and again, it was below the level, and we ended up getting down there. This ended up coming down on the 24th, so 4 days ago. We took a bounce off of it, and since that time, prices kind of rallied back up again. So a couple of things that we had talked about from last week. Again, we had one level below, this level, was right below us, and again, gave us an interesting buy. Much below this, and we talked about racetracks. I do remember that. Right now, where we are, we're kind of getting boxed in, right? We have an area up top that, again, we've been watching, we've been cautious about. We have an area down below where we have buyers. We have a Harry Potter trade set up a little bit lower down here, a break below 10,306. Back down into that, 101.51 area. Right now, again, it's a morning of up, or, like a night of up, morning of down, morning of up. Now, this area that I have marked off is what I'm calling an area of interest. It's actually an old area of interest from back here, but we're continuing to kind of bring it across. The reason why is it seems like price just wants to keep getting sucked into that area. As you can see, over here, it's been a lot of time here. That's where we originally marked the area off. Again, it launched itself off, bounced on the top, broke below, came back up and sucked in, right? Bounced on the bottom, bounced above, bounced on the bottom, bounced up. And what happened? It got sucked back in again. So this area is approximately 105.74 to 106.12. It's an area where price has been pulled back into. It's acting as a magnet. Now, that's important to understand, particularly when we're trying to choose profit targets for things. Right now, again, it's noon. This is what we typically see. Again, things tend to stop and base, and again, we will probably bounce off this for the rest of today. Right now, looking below, I'm not necessarily interested in many buys off this area. And then there's a few areas. There's two tested here, but that will be number 3 coming through. If this was a retest of this level, I think our best opportunities, I would say it's probably going to be the best opportunity. But I like it actually more for a short than I like it for a buy. Now, many of you have been with me for a couple of weeks or a couple of months at this point. I've thrown the acronym out, not acronym, but I've thrown the terminology, the Harry Potter trade, and it's that momentum breakout, and it's really based around the fundamental idea of, old areas become new areas. You guys have heard it before. Support and resistance trader. I'm not one of those, but you hear you'll hear people say that old support becomes new resistance and vice versa. Now, I am a big believer of with supply and demand, finding zones and popping back and forth. But one thing that I'm looking for is I'm actually looking for a break of this idea. Now, again, if it does hit this zone and it bounces, I'm be willing to take a long when it bounces off this level a second time. So something along these lines, right? If we get some type of a touch in and we get a little tiny bounce out and it doesn't break that last top and we come back down again, I'm going to be looking to take this in some type of a pattern north like this, right? So that's one possible scenario that I'm looking at. The other one is that Harry Potter. And again, I'll draw it in here just to make sure everybody gets it. I don't want anybody lost in here. But a Harry Potter is where we come down a bit, we base a bit, we come back up, we test, and then we got this. And we're looking for that. That's our continuation to the downside, all right? And again, I'm looking to get out of those trades before 101.51. So that's kind of ideal. If we get back up to this 11.035, I'm looking definitely to short. I think it's going to have a harder time getting up there than it will coming down. And ideally, if I had to say which one do I like better of these two, I do like it short versus the long. I think it coming back down to the 101 is a much better place between the barbs, the stimulus, gold, all the other factors out there. I think that's a better option for me for the downside. But as a trader, I need to be flexible, so I am waiting for a long bounce off of this area just in case it's able to kind of stabilize itself based off of an old level. Now S&P. And this is a great example. So last week, you know what? I probably didn't. It's probably not marked. Let me see. Let's see. Last week was the 21st, right? Yeah, 21st. So let me move this little line over. Let's get this guy over, and you guys can see where we were. So there's the new ones. All right. So 21 at 12 is right here, right there. All right. So as we mentioned, this was an area of interest that we were looking to follow. Perfect example of what I just went over, right? I said, hey, I'm not looking to take this one as a long. I mentioned that we had an area of basing right here that we're looking for, and that's actually what it went off of, is that area of basing. You guys can see it right here, right? Pop, grind, pop. And that's exactly what its takeoff point was. Now, whoops, what did I delete down there? Leave that, delete that one. Oops. I actually, you know what? I can pull this over here now. All right. So that level, we're interested to take that one off. But here's what I'm talking about. Old becomes new. So we had a level up top when we talked about, again, this would have been after the presentation because that was right over here. But again, we had that fair to go higher, right? The push up, the down, the base below. And again, what I just drew you in the last NQ chart is exactly the same pattern, except it was coming from the top. Drop, base, pull back up, grab it, and go short. Now, here's that area of interest. You can see if I extend this area of interest across, you can see exactly what we hit. So this is why I'm kind of leaving those white lines on the chart, looking for these levels. As far as this one, to me, this looks like this one wants to come down. It's been probed, it's probed down to this level a few times. You can see there's an area of basing where price turned away from this level. It dropped, it based, and it dropped again. It came up and retested that base, and now it's kind of floating here. So for me right now on S&P, I do feel that this one is also more of a bearish opportunity. I do have another one of those Harry Potter trades set up down at this lower level right here. And this would be kind of setting up risk in this level. Rectangle properties, and change this to, change it to a, sorry, I didn't want peach puff there. I wanted just peach, or just pink. I'm looking for something along these lines right here. Okay. Now, the timing of this one will also matter. You've heard me mention timing a few times. If we're able to kind of rally down over here, what I'd be looking for is some type of a retrace or a bounce off of this level for FOMC tomorrow. Personal spend, the pending home sales is probably not going to have the catalyst to move it, but FOMC absolutely will. So if we continue to push down, that will be an area I'm looking to go low. I don't know that I take another one off of this level. Maybe on a shorter term. I don't know. Let me see real quick. I mean, I guess if you wanted to get something a little bit aggressive, depending on like the time that it hits this level in here, there's probably something small there. But again, the timing of when it hits is going to make a big difference on that one. But again, I want this to go down. I'm looking for this one to crash. Look, it's hit 1, 2, 3, 4. I'm waiting for a crash below. Retrace of this racetrack. Again, there is a short in here, right? Profit targets need to be taken out here. And it's probably, what it probably is this. Hold on. Let me get that. It is probably coming off of this level right here. That's probably what it's coming off of right now. So we'll see. So for the rest of the afternoon, I'd be looking, for this one down. Profit targets. Make sure anything that you guys take short, make sure you are out before this level here at 32.06. Again, nice, decent bounce off of a level, and that's where it rocketed. There will probably be some buyers that step in this area. Watch out for them when they do collapse. Again, we're looking for a break below 31.87, dropping your target down approximately down here about 31.57. Okay. Looking at the Dow. So the Dow, we got a couple different things marked off here. So the Dow is one of the ones that we had set up. Let's see, this should be 14. Let me move this box over to 21. 21.12 is right here. Right there. All right, so we had marked off this level for Chart School, or for the Nadex broadcast. Chart School is what I call it for my group. For Nadex, it's just the market analysis. we saw this level and we said, hey, listen, guys, we got to test the level right here. And you can see we did come up and it gave us one short. Second short didn't quite make it. But again, you had your one entry here, two entries here, front run, three, and then that's when four broke through the top. We'd also marked off the 7110. I'm sorry, the 27.105 level up top. And we didn't spend much time there as well either. So again, has been two nice levels for us to take shorts in. Since that time, we've also had some nice levels to the downside. And this is kind of what we'd marked off for yesterday. So this 26,667 is something that we marked off last night. It has now completed its full profit target. Now, the reason I'm showing you guys on this one as well, and I'll drop it down to a 30-minute to get a little bit better review. As you can see, price was coming down. It kind of pulled up and kind of did this, not really a double top. The second one was a little bit higher, but we had a nice push off that level, right? A nice kind of test and push off that level. And that's what I was looking for it to hit again, right? So we've had this kind of sideways basing, but it was looking for something, okay? We've hit that level basically once, and we've broken really not that far into it. So I'm going to move this forward and keep this on my radar and say, hey, listen, if we can get up in this level again, I think there's a potential for one more. And why? Because we barely broke any ground into that zone. Okay, now we are at the 1 to 3 right now. We actually got very, very close to the 1 to 5, the target to the downside. But for me, keep this one on your radar. I think there's some definite opportunity here. 26,664. Couple ways you can set it up. You could look at this one for a binary, depending on the time. You could go into the 2-hour range on that one. It could be, again, depending on if we roll into tomorrow's prices. It could also be a call spread. Okay, either of those two I think are good options. Potentially there could be a knockout here, but here's one thing that I want you guys to keep in focus. Okay, remember, a binary, the most that you can lose is the amount that it takes you to get into the trade, but there is no stop loss. If price goes against us immensely, say it comes all the way up into this range, you're still in the binary and there's an opportunity for it to retrace. A call spread is the same thing. If you get a ceiling somewhere in this level, the risk will be low. And if it goes high, you still own the call spread. And then price has a chance to retrace. Okay. If you're at a knockout and the ceiling is right here, what's going to happen if price spikes higher? It's going to knock you out of the trade. So for something like FOMC, what I would do is I would keep this level marked off, this 26,664, and I would, two potential ways that I think have a better chance of success, or at least a little bit more room, like wiggle room, right, would be your binaries and your call spreads. Knockouts, again, if you want to get one in, just be aware that, hey, listen, if this thing gets any type of choppiness or whipsawing back and forth because of the volatility based off of what FOMC could say, or maybe the stimulus deal gets fixed tomorrow, right? Either of those two things are going to rock the market one way or the other. So just be very, very cautious going forward, especially with the Dow, with knockouts the rest of this week, because I feel like if we get one that's too close, just the chatter back and forth. Again, you can see the chatter we've had over the last 2 hours here today. Just the chatter could take you out of a position, and there's nothing more frustrating than your analysis being completely correct, right? I feel that price is going to, from this level, I feel like price is going to turn and go back down. And it doesn't turn. It goes up, but then it goes exactly where you thought it was, but you got stopped out of the position because you were using the wrong vehicle, right? The wrong asset. So make sure you match your assets to the trade this week, all right? So that would be the Dow. Overall, in a larger picture as well, I think the Dow's in an interesting situation where I do feel that it's going to come back into this 26,059 range. But ultimately, I feel like it's going to come back into this area down here about 25,541. That's the last real time in kind of this big kind of, as far as what I would call the curve. I feel like that's where its kind of stopping point is going to be when we really get negative sentiment. And like I said, if FOMC says the market's going to take 2 years to recover, if they say that, with a Democratic win, again, we could take 3 or 4 years to recover, there's no reason why the Dow would all of a sudden start to go to all-time highs. That's just not what they're, that's not what the focus is, and that's not where people think they're going to be. Okay. We're due for a recession, so it's not like it's one side or the other. We are definitely due for a recession. But with COVID coming around for round 2, vaccines will help, but the economy is definitely bruised. And it's really like, what do we look like going forward? I just don't think that there's too much that, can keep us at all-time highs at this point. We can stimulate it so much, but eventually we need to pay the piper, and I feel like that's what's going to bring this back down to 25,541. All right, so Aussie. Let me give you guys the big picture for Aussie right now. Here's your 4-hour, okay? Here's your daily. When I mentioned high on the curve and why there's such great opportunity right now, it's because we are so far up top here. We are so far up here, right? On the 4-hour, we can see we had a little bit of a level, and we actually had 2, right? So last week, let me make sure my timer is right on this one. last week we were sitting, it would have been at 21 and 4. We were writing, actually, here's the dot right here. Okay, so both these levels were marked off last week, and you can see we took the first hit and dropped. We came back up again, and then we had a little bit of a hiccup too, the 71.71. If I drop it down to an hourly, you can see and really get a good picture. We were here, and we talked about retracing this entire bit, but finding a good level to get in. Well, we found them. Again, they were 4-hour levels up top. And again, we got one entry, and we got our second entry here. If I move this across, you can see we got our second entry in short. Now, Australian news tonight, and this is why I said this is my challenge to you guys, is I want everybody to go out there tonight and find, what we have going on tonight. It's right here. Tonight at 9:30, we have news that expected it to be negative. Now, that negative sentiment is most likely factored in, but it's still negative news. There's going to be a negative reaction to it. If it comes in worse than expected, the market is going to need to readjust, right? The market will need to readjust. If it needs to readjust, what direction is it going to go in? Is it readjusting because of great news for the Aussie? No. Okay. So not only are, and again, there's a couple of different factors here. We're very high in the curve, again, where I'm more bearish than anything else with the Aussie. We're in an area right now where we've seen sellers turn it around. We have forecasted bad news tonight. So with all those things going, if we dial it down to lower time frames, and again, depending on what it does over the next, 8, 9 hours, there's going to be some interesting opportunity. Okay. I mean, there's a minor, again, we have this level up here that we have marked off, and that level kicks in right around 71.71. We've seen price turn around from that. There's probably an aggressive entry here as well that you can get into something along those lines. But like I said, it's important to have your zones marked off now because we want to make sure that we're able to play it later tonight. Okay, right now, again, it may go all the way back down. We may be talking about longs tonight, not shorts. But right now, if it was 9 o'clock tonight, I'd be looking to get short this position. Okay. Areas that I'd be watching out for, if it does continue to push down, we'll see how far it can go. Any type of short, again, your 1 to 3 here is good. Your 1 to 5 is good. There's a bit of a level here that I would be, I would be a bit cautious with 70.94. We did get a nice pullback. It touched the zone, which started right here. By some chance, if we can get down to this 70.83 level, that would be an area where I'd be considering going long. Okay, couple things could happen. We could kind of meander around, go sideways, and then if we get a spike down because of that Aussie news, this would be a wonderful place. It is based off of a 4-hour level. It's a wonderful place for price to turn around with that whole parabolic retracement. I'm sure you guys have watched. If you haven't, go to YouTube on Nadex's channel. Look for the parabolic retracement webinars, and it talks about what happens when news releases, news forecasts are wrong. You get big spikes in price and retraces. Okay. So again, if we do get a big spike down because of price, it will find an area to return and most likely retrace all the way back up to the same initial starting point. So that's kind of looking for Aussie. And again, I want you guys to pull Aussie dollar or go to Aussie yen tonight and see if you guys can find a trade setup. Now, Aussie yen, a little bit different, right? Like, wait, we're not all the way at the top. Why is this one not here? Well, this is Aussie dollar. This is gold strength, dollar weakness. This is gold strength, but you don't have the dollar with it. You have the yen. So a little bit different. So we had 2 levels marked off. We were unable to get into those levels. There was a great Sunday night trade in this one, kind of going back and forth. But really, from where we ended this weekend, we're in the same exact area. This one has not really moved that much. But again, tonight will be a great opportunity for this trade. Okay. You can go against the Aussie dollar, which is dollar weak, or you can go against the yen, which is also a great thing to play for news. The yen is actually typically, if I had to think about all the news positions that I placed this year, for me, the yen is the one that I go against the most. If it's Canadian news, I do CAD yen. If it's dollar, if it's Aussie yen, or if it's Aussie news, I go Aussie yen, right? I go Euro yen, I go pound yen. Not as much dollar yen because dollar yen is more based off the stock market, but for the most part, for something like this, I typically will look Aussie yen first and dollar. I'm sorry, Aussie yen first, Aussie dollar second. So where we are right now, again, this is a 4-hour chart. There's some levels right below, and I think those are the most important levels. We kind of need the Aussie to get a little bit weak from now till then. As you can see, we had a level here that we drew last week at 71.46. We were unable to get back down to that level, and there's multiple hits down here. There's another level down here at 74.27. The way that this one is setting up right now, I don't really necessarily love this one long or short. It is basically just staying, and I'll draw this here. It's basically staying within kind of this range right here. And when I say this range, You can see we ended Friday here, in here, and we dropped. We came back across to that same level, dropped. We came back up again to the same level here, this yellow box, and dropped again. And the bottom is also stabilizing. So right now it's more or less kind of a, let me change it from pink so everybody's like, great, we're selling from there. It's more or less just a channel trend, right? About 50 pips top and bottom. So again, and we're right in the middle, so there's really not much. So if we're in this upper range at 75.46, there could be a short opportunity today. If we are a little bit farther down here at 74.92, there is a long opportunity. Right now, we're right in the middle. There's absolutely no opportunity. And again, that's why we kind of pre-plan our trades ahead of time to see where price is. Now, news is at 9:30. So what will I do tonight, and what should you do? At 9 p.m. Eastern Standard Time, again, you can adjust the time zones. I'm going to log on and kind of make sure that I am looking at a chart. I've done my analysis. I'm going to see what's up top. I'm going to see what's below. And I'm also going to know on my Nadex platform, what are my options? How much premium is in those binaries? Where are the call spread floors and ceilings? Okay. How does it line up? That's what I'm going to do tonight. And again, that's what my challenge is for you. I want you guys to know the same thing. I want you guys to kind of, see if you can find a position to take in demo. Okay. If you've never traded this before, take it in demo and see if you can get it. Now, again, will it be here or the Aussie dollar? I don't know. We'll have to see what it looks like. Okay. But I want you to look at both. Now, Euro yen. Euro yen. So Euro yen put it atop. We had marked this one off before, the 124.18. It's basically done nothing. Here's where we were. Actually, that was 2 weeks ago. Let me bring this forward to 21, which is right. And it should be right here. Right. Yeah, right there. So that's where we were. We talked about going higher, finding an area where we could stop. As you can see, and again, I've mentioned this before earlier, right? Here's a large extended move in price, right? 6 candles straight up, large green bodies, pretty solid, no pullbacks. We're looking for a retracement. Guys, here's that parabolic retracement trade. Large emotional spike up, and it crashed all the way back down again. So this 122.89 has now held. We had marked that off before. Again, we talked about chart school that this was a level, or for the Nadex broadcast, we needed to follow this level, right? We had a rally, a base, and a push off again. And we were right here. We didn't know if this was going to be the area, but once we got this test, we knew that this area was a legitimate area. It was a bounce. It did bounce higher. We're kind of sitting at the level now. This level may be good for one more hit. The only word of caution that I would have for the euro yen right now is the fact that if it does break this zone, which it could, again, it could. It's got another zone below it, and another zone below it. I'm still recovering from the weekend, if you guys can't tell. Boys lacrosse tournament all weekend. And I don't know if any of you guys have 10-year-olds out there, but 10-year-olds have selective hearing. When you tell them to come off the field and they don't want to, they pretend they can't hear you. And yeah, so I'm still paying for it 2 days later. Anyway, 122.89 I think is a good area. I think intraday, if we could, associate this with some type of either European news or US-based news, something that will affect the overall markets, I think there's a good long off this area. Larger time frame though, I am looking for buys. I think the next cleanest biased area are down here at 122.02. About 100 pips from where we are, so it's about a day away. Again, this could be tomorrow. This could be an FOMC thing too, because again, FOMC will move the market. Move the indices. The indices are the yen. Okay, so there could be some movement. But top and bottom, again, I'll move this one forward. For me right now, I love the 124.12 area. Again, there's a 4-hour and an hourly overlap here. We've seen buyers or sellers step in, and then 122.02 is kind of the bottom. And again, there's a short-term, more aggressive target here. Pound yen. So pound yen, we were sitting here last week. Again, we got kind of a level that was tested. We saw it. This is, again, one of those violated zones. For me, top side on this one, we do have some sellers that have stepped in at 136.43. That area right now is only about 40 pips away, so that is definitely within striking distance. Again, depending on what time we hit this one, I think there could be a very interesting trade setup here to the short side. I like how the pound today has been nothing but straight up. I mean, it's definitely in the last 4 hours, it's had some nice movement. It's solid. It's not, not greens and reds. It's up. So it's going to find a level to turn around and come back short again, most likely to retrace. I think 136 is the place. There's a small zone here, but I think 136.43 is the place. Now, why is this yellow here? Okay, well, here's why. Here is the level that we had talked about. Not with you guys, with my group, right? It was a rally, a base, and then a punch forward. It was retested, so we knew it was a legitimate zone. Not only did it hit, it punched, it ended up breaking. So here, I left this on for you guys for one purpose. excuse me, I drew it earlier today, right? That Harry Potter. Here is the exact Harry Potter, the momentum breakout out of a previously broken zone. I couldn't have drawn it better, and that's why I left it here, right? Here's the break, here's the base, here's the retest, there's the punch through. Okay. Now, it did end here, right? What do we do with it now? I mean, the trade's already occurred. It ended the week there. We weren't interested in taking it again. It ended up coming back down, again, dropping from that zone opening and dropping and hitting again. But you guys can see it hit again. And if I extend just this yellow line, let me extend just this yellow. And again, you guys can see that it's bracketed. This is what I'm talking about, those areas of interest. And again, this is one of those terms. It's terminology I'm using a lot more lately because I'm finding that it's helping people understand why price turns in specific areas. Okay, it's not a magical percentage. There's no, there's reasons why prices turn. Okay, typically big money. And in this day and age, there's also computers that are, in the markets that we trade against. If you didn't know that, surprise, yes, there are computers that trade against us these days, right? But look at this level. It was an area that caused problems. Again, it was originally back here, but it had issues. It stalled, right? When it tried to punch through, buyer stepped in. Next time, buyer stepped in. Then it punched through, and then what happened? Then sellers stepped in. Then sellers stepped in. Then sellers stepped in. Then sellers stepped in. And then this was the news up and down. But what did it do after that, right? Up, down, little tiny body. It went back and forth, and it rode, dropped, pulled away, came back up. Again, hit that zone, pulled away, came back up again. So this is one of those areas that we need to keep an eye on, that price just keeps getting sucked into this area. How can you use that? Well, great. I'm glad that you asked. If we get an entry up in here, and again, we'll have to refine this target a little bit later, you need to make sure that any of your shorts are out before we get to that area, okay? If you have a risk to reward that you deem is acceptable and it's sitting over here beyond that zone, not necessarily the smartest place to have it. If it's here, you're fine, right? Anything above, you are okay, because we're going to have to expect that if we hit this level, we are going to bounce. There's going to be, I mean, it might be slight. It might just be like a hit like this in a turn. But you have to make sure that you stack the odds in your favor. Putting it over here is not going to help you. Putting it here, good. But again, you need to make sure that your risk is justified. So for me, 136.43 is a good one on the top side. Ideally, I'd like it to get down to 134.25. I don't know if we'll get there. Again, we're high on the curve, so we're more set up right now for shorts than we are for longs. There is a minor level. I don't know if you guys can see it or not, but there's a minor level sitting right here, and we've already bounced off of it. So it's kind of like if you had to do two profit targets, you'd want to make sure profit target 1 is here, and you want to make sure profit target 2 is before we hit this level. That would be the safest two ways to end up playing that one. And again, if we get over here tomorrow morning, there could be a long from there. It depends on what we see in the overnight. So right now, what I would say is 136.43 is one area that I'm interested. There is a 4-hour level right above it. 134.25 on the downside. And then if you guys are a little bit more aggressive, you're a little bit more, into risk. And again, the timing comes out right. 135.0, basically 135.00 is also a potential area where we could get long. Now, again, a little bit more timing based. The two times that I would be very interested in trading that is if we can get back down there for the London Open tomorrow. I would be interested in taking that with the London Open, or potentially the FOMC notes, if we can be there at FOMC time, if it's fresh, if it hasn't been touched yet. Okay. Now, pound dollar. Pound dollar has been rallying, but you can see we're sitting right now inside of a 4-hour zone. So, I can bring it to this level. You guys can see this 129.40 is an area that we had marked off. We were sitting here last week, and we talked about finding kind of a high area. I mentioned I did not like this zone here. There's some things here. And again, it chopped back and forth, down, up, down, up. Finally broke out of this level, and it also did the same exact thing, right? It's a very common pattern, guys. This was a level that we had talked about. Actually, I didn't talk about it with you guys. It happened right after we finished up, right? That's where the high was. We said maybe the high could be here, but it punched one more time and then pulled away and said, okay, that's good. We got one front run, one touch, number 3 touched, then pulled back, and number 4 is the magic number. And here's that continuation trade. What did it do? It punched higher, it based, and what did it do? It pulled back. You guys can see it touched right here. It went into the yellow zone and did what? Continued its trend. Continue to go higher. So, again, just another example of that momentum breakout trade. So where we are right now, okay, we've had basically 4 hours or 3 hours, about 4 hours straight up. We've now run into, and I don't know if you guys can see it, I'll box it off right here. There's the bottom side, and there's the top side of, again, there's the dots right there. It's just the overlay. It's that 4-hour zone. Whoops. Let me go back to this. 4-hour, 4-hour. You guys can see it's right there. Okay, but we're looking at the low time frame. So with it being so strong, with it hitting a 4-hour zone, I'm also flipping into bearish mode for the pound dollar. Pound dollar is one of those ones that there are, again, we have binaries, we have call spreads, we have knockouts. For me on this one, I think probably binary and knockout are probably the best two right now. Because we are late in the day, we don't have as much time. Call spreads kind of eliminate themselves on this one. I like where we are with price right now. Ideally, I would have liked this if we were here with news, but we're not. But I do feel it. Oh, excuse me. I do feel that this is a great opportunity to get short in this level. Probably the best way to play it is going to be drop it down to a 30-minute chart. Look for any level of basing. We don't actually have it yet. We don't have that confirmation to the downside, but look to see if we have something like this, where we have a push up, a drop, a base, and then a push through. It's not there yet, but if we get one of those, then look for that as an area where we're looking to be short. And again, I'm looking to take over probably back into this range right here. I think this as a target, this level right here as a target is a little bit risky, just because we know that buyers stepped in. I think this is probably target 1, target 2, and then target 3 would be back down here at 127.63. But for me on this one, I'm bearish. Again, we're in a 4-hour zone. We've had quite a fast spike up. Looking for a reversal trade on this one back to the downside. Now, euro pound. Euro pound, this one was a little frustrating. So we were sitting, I thought I moved these off, but I guess I did. Let's see, 21st at 21st at 12 is right here. Right here. Okay. Now, we talked about being in a small level. It had hit back and forth. It's kind of one of those ones we mentioned that, hey, listen, we're at a level right now. You could not take it. I wasn't the biggest fan. It did end up going really high back on that one. Now, there was some entries up top. We were looking for a kind of a refined level. So the problem that I have with this one is, I don't know if you guys can see the dots here, right? Top and bottom. These dots are about 36 pips apart. They're quite large, and that's on an hourly. That's an hourly, right? That's a lot of risk. A lot of risk for this pair that doesn't move that much. A daily ATR on this is only 65, so that's like literally half of its day's worth of movement. You can see it here. It's a 4-hour, right? Do you guys see how wide this zone is? The candle formation, even back on the hourly on this one, for me, was just horrible. Where is it? I can go back that far. It's not that one. Where is it? Go all the way back to here. I'll show you guys what I mean. See how that was formed? It was a gigantic candle. Now, price did base below it, but the candle formation was just very, very difficult to get a true read, a good kind of good quality amount of risk for the time frame that we're on and the currency pair. So I refined it up to 91.65. Unfortunately, it literally hit the bottom of that risk zone and turned and flipped on us and rolled. Always frustrating when that happens, but there's really not a whole lot we can do about it. You guys can see that the touch occurred right here. It actually went about that deep into that zone. Again, I personally didn't want to take the risk. A way to reduce that risk, again, would be inside of using Nadex with those binaries, getting something that's close, using something at the money. So it's dumped over in price. At this point, I feel like it's kind of in the middle of the range. This 91.67. There is a zone here that would have been profit targets, and that's where you're seeing a little bit of green. For me, I'm looking for potential long opportunities at 90.11, and then if we get back up at 91.47, would be interested in taking shorts off that side. Okay, euro dollar. So euro dollar right now is quite flat. We had a lot of strength. So dropping this one back over here. Let me move this guy forward again. That was on 14. Whoops. Right there. Let's see. 721 at 12. Yeah, it's right here. So after we met last week, this thing went crazy. For the rest of the week, it was euro strength. We talked about that EU economic summit coming out with stimulus. What would do that for the European economy? Would it be strong? Would it be weak? Last week, the market was in love with that EU economic stimulus. Okay, it pushed high. Okay, it did go up to higher levels. You guys can see on the 4-hour right here. It actually bounced off of a daily level. Right there was the daily level it ran into, and now we're getting red candles. Okay, and it is pushed back. It's kind of turned. My bias on this one right now would be to the short side. Now we're basically right now we're just going sideways. There's just nothing pushing the euro right now. But if I'm looking at this one, I got to say, hey, listen, We are extremely high in the curve. We went off at a higher area where sellers have stepped in. We saw them step in again. We've put this down. It has grabbed some buyers. So, I mean, there is a level here. But if we're unable to punch any higher, if we start breaking back down again, I think we got to look to I think we got to look to short, for shorts back down to the 116 level. I think that's a pretty clean level. It's about 135, 140 pips down from where we are right now. I think there's some good potential in that one. Now, this is going to require dollar strength. With the FOMC talking tomorrow, don't know if they're going to give us some strength or some major weakness. It's going to be one or the other, right? But I do think what they say could have some big repercussions in the market. I would say, again, if we can rally from, if we can push any more farther down, again, 116 would be my target on that one to the downside. Okay, dollar CAD. So dollar CAD, we mentioned this last week. The story hasn't really changed, and in fact, the highs have gotten even lower on this one. It did push a little bit lower, so we were sitting. Let's see, put a box on this one. I think last week I forgot to slide these boxes forward. Yeah, I did. I forgot to put the boxes forward. It should be right in here, right? Yeah, right there is where we were last week. Okay. So you can see we ended up pushing back down to that 133.56. It was an area that we had talked about. We refined it. Remember that this is actually a 4-hour zone. We refined it down a little bit. You can see it took not only one bounce, but it took a second bounce off this 33.65 level. It pushed back up. It didn't quite go as high as where we were last week, and it pushed sideways. This one will probably move a bit tomorrow with the oil release, as well as CAD news later in the week. So right now, I'm not really in love with it. It's more sideways than anything else. I mean, you guys can see on the daily ATR, it's basically flat. Like this was the COVID craziness, and now we're kind of coming all the way back down again. Bearish in the sense that we are low on the curve, but it has the ability to go a bit deeper. It's not even all the way down. That level is really down here. So it's got a little bit more ways to go. And you can see it's just really chopping back and forth. It's got some buyers below. So not the most, not the highest probability trade. Again, FOMC notes could jack this thing to the top side. Maybe it makes sense, but unfortunately, from my experience, it seems like the dollar CAD is the one that has it's the slowest kind of reactionary pair as far as like Nadex pricing goes. I believe that for some of the pairs like the euro dollar, Nadex is very aggressive, changing its pricing and changing its spreads around. The CAD seems like it delays behind a little bit. So I always feel like it's playing catch up, and I don't feel like it's back to where it should be yet. So it'll be there soon. I have full confidence that it will be there. But like I said, it's not the most commonly traded pair. So again, the eyes are where they're supposed to be, keeping the euro dollar, pound dollar down. This one, ideally, I just don't feel like it's there yet. All right. So be cautious with it. But again, you can use it for oil tomorrow. Dollar yen. So dollar yen is obviously dropping. Okay. So there was a nice little level in here. This is a level I marked off for my guys yesterday that, hey, listen, we got a nice push up. We pulled back again. We pulled down again. We retested that level. That's what we hit this morning and pushed lower. I don't really see too much that's going to slow this down until 103.34. Again, you're looking for pullback opportunities, and that's exactly what we just, I just marked off on this lower time frame right here with this pattern. Okay, I can drop it down one lower. You guys can see it a little bit better. We had a level here. We put a level in. It came below, retested that level, and launched. Came back up into that level again, retest from there, and dropped again. So I'm bearish this position. I feel that this position will continue to push lower. I do feel, though, tomorrow we need to be very cautious if you're trading this pair. FOMC does have the ability to jack this one around. It's not so much the dollar. It's going to be the yen play tomorrow. It's going to be the yen play. But right now, again, I'm looking for pullbacks, looking to get short. I wanted to come back down to 103.34. If we get to that level, I'll be looking for any type of confirmation of a trend change, and I'll be looking to get long that one. Okay. On the lower time frames right now, I don't really have a great reentry on this one. The great reentry would have been over here. I just don't see. There's just not much over here right now. This one came in at about early morning, about 4:30. Here's 8. Here's your 10 o'clock, and it's just flat. So I don't think I'll use that level again. If we rally up from tonight till tomorrow, 106.03 would be the next place I'm looking for a clean short. We'll see if one could form here, but right now I'd be very cautious with this 105.57. 106.36 is a cleaner level to me. It's much less untested. There we go, all the way across. I was like, why is it not there? That level. I like this one a lot. I'm a very big fan of this level. I do like this one very, very much so. Okay. Dollar Swiss. So Dollar Swiss, we're looking for an entry here as well. So let me drag this one across. Your timer. And I even said last week that I'm going to be good about this. I'm going to update this each week so we can kind of see where the week has progressed. Here's the push right there, right above the D. If you guys remember what I told you last week, this was one that I could see continued weakness in. Okay, I mentioned every day last week we kind of grind lower, grind lower, grind lower, kind of pull back, and there's been a few opportunities to get in. So this is a geopolitical based pair. U.S. and China. I mean, what are they doing every day? Okay, you take the people out of here, you take the people out of here, you take the people out of here. It's just not, it's not necessarily a healthy thing for this pair. It will continue to bring Swiss strength in the market. It will continue to push lower. We don't have any really great levels in this one. Still a bit lower, right? I mean, even right here, I don't even have anything, on my radar. We're pushing through this spike. The original, March 9th low, we've just pushed through it. We've just pushed through it. You guys can see, if you guys are wondering if you're new, these are supply. Well, red is obviously supply. The green is demand levels. There's nothing, right? There's nothing. Even on a weekly basis, you guys can see there's just nothing, going back. This is kind of what we're dealing with right now. So this one has some craziness. This one can move, right? So still bearish, still bearish this position. For me right now, I'm not looking to call a bottom on it, even with like a failure to go lower. I'm just looking for decent pullbacks. We had a level up here that I was interested in taking, but price did not make it back up. But at 92.52, I'm it's an area where I'm willing to get short in. There is a small level that was just formed right in this level right here. Again, it was a drop, and actually I'll change this out of blue because we'll put it back to white. Again, what happened here? Price dropped, it based, it dropped again, and then what did it do? It rallied back up, touched the level, and it's starting to push over. So, this could be a level that we look for additional shorts going into, the next couple days. Now, looking at gold. Gold has obviously been kind of a little bit all over the place. All right, so I had 3 levels marked off that I said were going to be speed bumps. I was like, hey, we got one here. Speed bump, speed bump. We're not really like super, high on the curve. So it ended up pulling back down into that last area. The last area that we saw of basing on this one, it's easier to see on this level. You guys see how it comes up and it bases here and then punches off. But what I said was this is where your target needs to be. Okay, you guys can see it right there, coincides with right here. Okay, that's where it turned. So let me remove these just so we can clean it up a little bit. All right, so gold is going to come into play tomorrow. Okay. Right now, if you look on a 4-hour basis, gold is very, very, very high up here. We had a whole bunch of little trades set up. We're very, very high now, right? This is the 4 hours, so those are way back there. On an hourly, you can see again we put a top in. Okay, is it necessarily the best top? It's all right. I would take it. Of these two, the way that I would mark this one off is I would actually use this top level here at about 1973. Price did push up. It kind of based in it a little bit, and then it got pushed down pretty fast, pretty sharp. What I would say is I like this trade more for an after-hours trade than a regular U.S. market hours. And the reason why is after hours, when our markets are closed, typically we're not going to hear too much news about stimulus being. I mean, like 9 o'clock at night, we're not going to hear about we just approved stimulus. It's most likely going to be during the day. So my take on this one is it's kind of like in the overnight, I am a little bit more short biased. During the day, I'm a little bit more long biased because, again, retail traders are help driving this. Now, overall, am I bearish this position? No. Okay, I would very much be on the bullish side of gold right now. When we get the true details of stimulus, and I said I would mention stimulus. I know I'm going to probably go a couple minutes over today, guys, and I apologize for that, but right now, the two sides of stimulus are a one-time $1,200 check, or the other side is saying that they want to do kind of the, how we, currently right now you get like the 600, anybody that puts in for unemployment gets 600 additional dollars from the government. They're talking about lowering that a little bit, and kind of the negotiation of that was, well, how about 70%? And states are like, no, it's way too difficult. You're never going to be able to do 70% based off prior earnings. You're just making it complicated. Make it a flat amount, okay? Of the two sides, I think that they have to, instead of mailing everybody $1,200, I don't think that that's going to help anybody at this point. Because again, some people are still working full time. They're working full time remotely, or maybe have gone back to their offices or had reopened. Those aren't the people that are going to need the help. It's the people that are not working that are going to need the help. So sending them a smaller check so everybody can get an equal payment isn't going to help them. they're going to need some additional stimulus on the kind of the people that are on unemployment. Those are the people that are going to need it the most. So I think that that's the side that's probably going to win. I think if they're worried about reducing their cost and outlay of how much money is going to be sent out for unemployment benefits, the way to do it would be just give stimulus to people on unemployment. Do not give out a check. But that's currently what's out there. Either way is going to be considered printing money. Although the problems right now, and the reason why I do think that the overall indices are going to be a bit more bearish, is right now neither side has come up with anything to make up for the gap of August. Right now, the new benefits won't kick in until September. So August is kind of like, there's just nothing. You guys can just get whatever you guys want. So I think it's hard. When they do mention it, though, this gold is going to skyrocket again. Okay. Again, anytime you're printing money to give it to people, it's got to come from somewhere. It's going to jack inflation. And again, that's going to be a gold play. So overall, I think being long gold is not a bad thing at this point. Taking your positions in gold, and again, maybe using some of the longer term stuff out there that Nadex has to offer, is probably a better bet. If you're interested in playing gold for the FOMC tomorrow or anything stimulus wise, make sure you guys look at what the premium is. Make sure you understand the difference between the bid-ask spread, and make sure you're not taking in just a ton of premium. You may have to for that release, but again, I would say that I'm definitely more long-term bullish on gold. Now, silver also. Now, silver has been pulling back. All right. Remember I talked about this before? Well, I drew this for, my guys the other day. Okay, I drew this for my guys. And I said, listen, we have a level here. It's been touched a few different times. You guys can see 1, 2, 3, and 4 is what broke. Again, we've talked about in this channel many times that we break on 4. 1, 2, 3, 4. And what do we do? It pulled down. What did it do? It retested and went down. So this is something we had talked about late last week with my group. This is another example, guys, of how these things break and the old becomes the new. It's an area of interest. We just bounced off of it again. So silver, I also think will get drug higher. It's not as much of an inflation hedge, but it does get drug along because it's in the metals basket. Ideally, right now, areas I'd be looking at are, again, probably up in this 26 range. Again, that's a high. When it gets close, people are going to be really into it. I don't really see a lot based off this candle. There's not a lot stopping it from going there. If we start to turn and rally higher, it will probably be a slower grind, but I do think there is a potential long here off of this zone. So there could be something here today. If we can get in a position to that side. Downside wise, now that we've had a spike down, I think if for some reason silver suddenly starts to crash, I think we're good down to 21. So for me, 25.98 is my selling, 21.55 is my buying. Now, not last but not least, let's go over and let me pull the trading view chart for oil. That's been the one that we've been kind of keeping things and saving them on. Where's crude oil? Right there. Now, if you guys remember what we've been talking about crude oil, we've had kind of this sweet spot in crude oil that this thing just won't leave, right? There we go. And you guys remember that area. So you go back up to the hourly, has been this 41 mark, right? 41 has been a big area, and we've talked about spikes going in either direction, right? So this 41.05 to 41.70, we're literally bouncing back and forth in it, right? It's just been crazy. We were sitting right here. Actually, let's see. The 28, 21 is right. Where is it? 21, 17, 21, 17. We were right. Oops, I'm just trying to move it. No, I just want to move it. That's going to make me, it's going to be all weird on me. Here we go. 21, 17. Basically right there is where we were, okay? Actually, it would have been right on this candle. So actually, let me move this for a second. Right here is where we were. So we had this level last week in gold, and in oil. As you can see, it ended up going back into that 41 level. We got the same touch. So this is a trade that you guys could have taken on Thursday last week. So that analysis is still probably fine. I think 42.20 is an area where we can look to get short. And again, we were right here. We were on this little candle. So again, you had the opportunity to get in that one last week. I think it's good for one more hit if we can get up to 42. Now, for oil inventory, as I mentioned last week, I would like for price to be there before price happens. But if we go up in the middle of the night and hit it, it could be a nice little short. Now, downside is a little bit more difficult to kind of figure out. there was a small zone here. And actually, let me click this just so it stops popping up on us. Okay. There's a zone here. Again, this zone has been now triggered. Okay. So it's kind of confirmed to us that we do have some buyers down there. So right now, again, we have this kind of attraction level. And again, if you guys remember back, right, this 41 level, we hit it, 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 we hit it to the downside. And then it became a hit it, through, pop, and it's just been kind of it's been stuck in that same level. So for me, I think down here at, I'll put a horizontal, I'll put a ray. Let's see, right here. I think there's a good level for a long, and that is at 41.34, right there. And I think shorts up here. So I think my two areas that I'm looking at are, again, this green line. I'm sorry, the green line would be here at 40.59 and 42.20. I think are our two areas. If we're down in this level, or even potentially lower at news release tomorrow at 10:30, again, look for a long. If we touch here in the middle of the night, top side, look for a short. All right, so that's oil. This chart's a little bit sloppier, but we have a bunch of different levels from different time frames on here. So again, not pushing things through. Keep saving them on us. All right. All right, so that's what we got for that one. So that's it for today, guys. Again, a lot of stuff to cover. Hopefully I didn't go off on too many tangents for you guys. Like I said, I wanted to add some additional things in there about the stimulus and stuff. So make sure you guys tune in next week. Be very, very cautious, guys. My last word of warning to you is make sure you are cautious with tomorrow's FOMC. I'm expecting that there's going to be some big fireworks. Again, I don't expect the rate to change, but any type of forecast about what a recession is going to look like in the fall, what the election looks like, what the vaccine status looks like, how long the market economy is going to take to recover are all extremely important things that could definitely turn the market negative. Even looking at the market right now, and again, this is just bringing in kind of trading view real fast, guys. I mean, look, we have negative, negative, negative. Gold is positive, negative across here too. So it's just, volatility down, down. I mean, it's just, there's a lot of red in the market. So, depending on what they say tomorrow, I think we got to be extremely cautious. All right. So with that, guys, thank you so much for joining me again. If you need me, have any questions about anything I said, you're more than welcome to message me or email me at support@keeptradingsimple.com. I will catch you guys next week. Take care.